Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for our Wednesday, April 24th, 2024. It's 2:46 p.m. Eastern Time as I'm starting the video, and we're going to do an update primarily on the stocks formerly known as the Magnificent Seven, as well as the stock market. Obviously, if you can get insight to where those market leaders are going, that's where the market goes. No ifs, ands, or buts about that. So we're going to look at those stocks from a couple different angles. Some things we haven't looked at lately, mainly the weekly chart, longer term outlook, and the near term, because they are the bulk of those are reporting this week. So I'm going to go over each of those stocks individually. Will not be a super long video. I'm going to start out here with natural gas because there was a request for an update. It's moving today. It's down quite a bit. I still like it. I've got a position I'm holding on to for now. There's, surprisingly, this wasn't on the natural gas inventory report. That actually comes out tomorrow, 10:30. If you're a natural gas trader, just like a crude trader should know, crude report comes out every Wednesday at 10:30. Natural gas is Thursday. So whatever it was, I didn't read. I'm sure there's something, but either way, technically, that to me, it's all that matters is how the charts look. We pulled back to that, what I've called R1, S1 zone. When you're above it, it's support. It's the zone right here on UNG. And R1 is resistance. And you've got a little minor uptrend line there was taken out. So, all in all, you still have this big, remember, and I didn't have the chart queued up now. I covered it in the past on a long-term, multi-year, multi-decade chart of nat gas futures. We're at the low end of the range, long-term support. UNG is an ETF that tracks the futures, so you're not going to see the chart gets distorted over time. It's not going to have the same technicals. You have to pull a $NATGAS on stockcharts.com or whatever platform you're looking at. Anyways, so we're down at the low end of the range, and so that's it. So it's so far, started to get going there at the first target. So far, we've made a lower high, but we're still above that recent low there, coming off that divergent low, and more importantly, at support. So it's kind of just grinding around. In fact, I recently rolled from the Mays to the Junes. Here's the June contract. This trend line is kind of questionable because I had to exclude a few spikes through it there and there. And so basically what it looks like in a nutshell on the June contract, which is the Mays are still trading, I think, more volumes than the Junes now. So it just rolled the other day. But there it is. You have a breakout right there, rally into this resistance level about 214, a rejection, but a back test of the trend line. So there's something to like there. And again, we're coming off this big divergent low, i.e. positive, aka bullish divergence. So now we need to pop 214, and then you can see some potential targets there for the Junes, or stick with UNG. Again, these trades, I always say, best to align those targets if that's what you're trading. If you don't use futures, at least you can chart the futures. Most trading platforms will give you the futures and then replicate those charts and watch to see when the futures hit resistance, because that's going to impact this one. Okay, so enough on that. That's that. Let me update wheat. Wheat's still looking good. And remember the other day I highlighted we took out R1. So wheat's been posted forever and a day as a setup. We even had an entry back here. I said wheat would be along on a break of this downtrend line and or the R1 level, and or means you can do that two ways. You can take a partial position there, but wait until a break, or that's and one there and one on the break of R1, or you can do either or. The benefit of the doubt is you wait for R1 to go. So I already covered this recently. We broke out. We rallied right into that R1, the first resistance. And I called it R1, not T1, because it wasn't enough. If you're wondering why sometimes I'll list the first resistance level as a resistance, not a target, because it's not worth it. The breakout was, the initial pop up. I'm going to measure it. I'm just going to move over so I don't move my trend lines. This is 3%. Now, you could have grabbed a quick 3%, but from the back test of the trend line now, it's been to get to R1 was about 5-6, and it's up a total of about 10-11%. What I'm going to do right now, I wanted to wait to the video. I'll give you a level here. And now I have no desire to take profits because this thing's just broken out of R1 and it's moving impulsively off the trend line too. That's nice price action. You got a little of that there and then kind of gets sold into. Remember, this thing's been putting in divergent lows for a while. But long term, I still like it, in both near term, of course, now that R1's been taken out. But I wanted to just show you there's a minor resistance level here. You could use as resistance. It's not too late. The day's not over. But if you don't know this, wheat, this ETN, like all ETN commodity tracking ETNs are tracking the futures. The futures stopped trading. They stopped a couple hours ago. I think it's 1:30 p.m. Eastern time. They have quirky hours. A lot of these agricultural commodities. And so when you look at wheat every day, if you're wondering why it's going to stall out the second part of the day, you're going to see it flatten out. Now, you can still trade it, but the futures have stopped trading, so you're not going to see any moves, or follow through to breakout or anything after that once the futures stop trading. But this is an ETN, so you can still get in or out. I guess that's maybe an advantage there. I don't know. Either way, I just want to mention there's some resistance there. I'm going to color it down. And again, I'm not going to change that to the first target. I easily could, but it's just, to me, I think there's a lot more upside. I'm looking at the, likely a more significant turn in that. So just wanted to give you an update there. And now let's roll in and talk about the market here. Okay, I'm going to focus mainly on the Nasdaq 100, primarily because that's my go-to index. Small caps too. I like to trade, and I got a chart out to you today. But this is the 60-minute chart right here. There's that about 430 resistance level hit. Remember, what happened is we had our initial short entry was back here. You can go all the way back to that's where do I have it here? Let's see. This is the post FOMC pop right there. This was back on March 21st, which as of now is the top in the Nasdaq 100. We'll see if it gets built on. And we had that divergent high rally into the top of the range. There was the FOMC pop. We waited a day for it to run its course. Entered right there, right off the highs in both a quick trade. If someone wanted to, active traders want to swing trade it down to the bottom of the range for about a 4% gain, which we obviously hit, or as well as typical swing traders expecting a complete FOMC rally fade. That D shouldn't be there. A complete fade of the rally, which means the whole thing down to there. That's the FOMC rally. And I said at the time that if they took that out, that would in itself be quite bearish because it would wipe out all the people that jumped on the what I call noise and the initial reaction. There was a lot of buyers that stepped in there, a lot of stops, shorts blown out. We know from the comments that day there was a crescendo. I've never in my since doing this, since running the website, had so many negative comments. About just you would think that it's a serial killer of small children or something by talking about shorting the market after that. But that was a good sign. Like I said, it really helps. You have to, to end a strong bull trend, it really takes that sentiment swinging to the other side where the masses capitulate and think the market will never go down again, at least for the foreseeable future, only go up and buy every dip. And then, of course, the ultimate break below to the bottom of the range, which is QQQ 433. And so that brings us to where we were. This was the bottom of the range. It's purple range here. So that was the post FOMC short. I think, no, was that it? Yeah, that was it. March 21st right there. Swung it down, and then this was it right here. This was the big magic 433 giving way, bear flagging and back testing. Flag broke down, took us down here, rallied back up. And so today was just a rally back to underneath to that flag. And look, like I said, anything's possible. This battle so far, if you're, check mark by check mark, it's playing out pretty well. There's a few other check marks I want to see, and I'm going to get to that in 1 second with the big fangs or Mag 7, the remaining holdouts. And I've been very clear on my trading plan, which is, anything up to there. I told you I got my last of what a comfortable amount. I can, there's always dry powder to be found if I want it. But I'd really not want to see, especially after today's high. I don't plan to add any more shorts, even though I think it is objective to add up to 433, but not above. If we pop 433 and it's anything, but a brief whipsaw and then it fails, I would wait. This is what I would do. If you're waiting to short for whatever reason, or you're however you're looking at this, a move back above 433 on face value will be bullish unless it fails. So the thing to do is, sure, there's a downtrend line there. There's plenty of resistance in the zone, but I would hold off if you're looking to short, add to shorts or get into shorts only if a recovery of 433 fails. So once you fall back down below it. And otherwise, if we keep going up, then yeah, you got to realize, depending on where your entry is or average entry price, and also relative to your target. Always talk about, stops are dependent. This trade, and I've done this more and more in recent years, like many swing trades, it's not a binary trade. There's not one entry and one exit, one exit point. I've always been an active swing trader, and I've incorporated more and more of that into the site, giving you objective levels where bounces are likely like this one, and you can cover the shorts, game a bounce, get back in. And like I said this morning, then you got to, you turn an 8% short trade into another 2 to 4% game in the bounce. And then if we go down here, so the whole drop down to my, let's say T4, which we're kind of leaning towards right now, T4, T5, that's going to be a drop on the highs about 12%, but we could turn that into a, 20% or, well into the high double digits profitable swing trade. Again, technically, it's not the same trade. If you close it out, you're going to get on your, statements at the end of the year, tax. It's, it's different trades. That was a short, and then that's closed out, and that's a long. But you follow what I'm saying. So that's, that's what we're here to do, swing trading. If you were an investor, I'd tell you put all your money in an index fund, and if you're, got a 20-year time horizon, and throw the key away, and you should be okay. I don't think you'll do great over the next 10 years, but in fact, I think you'll be down with that strategy. But that's for another day, that conversation. All right, let's go over everything. Okay, so you know my thoughts, my levels. I think this is the first counter trend bounce off the initial leg down off the top. First decent counter trend tradable bounce. This should be next, and probably, since we already had a good reaction here, probably very little, if any, reaction. Remember, I shared my thoughts at T1 that was a target that I didn't care to game a bounce. I didn't think there was enough juice, and nor was there. T2, I thought there was enough juice. Got that out to you clearly. T3, my guess is we'll probably smash down, and I think it's all going to be about earnings, and I think this will be the catalyst for not just more downside to hit these targets, but open the door to my longer-term targets on the weekly chart that are much, much lower. So, you can be, near term, you're looking, if we hit this about a, from top down, like I said, anywhere from 12 to 15% short trade. But then the longer term targets are a whole lot more. And I try to speak to everybody because everyone has different skill sets, they have different inclinations. Some people don't want to try to game bounces. Some people don't have the time. They work work a job, other than, doing this full time, or they're retired. So on those, I'd say, if you shorted the highs there, took that post-Fed trade or anything in, or you took the 433 breakdown, maybe that was too aggressive. I said it was, not the highest probability trade. The market was ripping higher and punched through to new highs. But this one was the higher probability trade. Then when NVIDIA broke down after it, boom, that was to me like, okay, I have more than enough check marks I need, and now we're going to go over the remaining few. Okay, you remember a few weeks back, before we even took out 433, I showed you a pretty reliable trend indicator change. I had the bearish PPO crossover. That's what this is, the histogram for the PPO. It's very similar to the MACD. My preference usually on most charts, so I use the PPO, and it does a very good job of defining trends. And you get the change, you get your corrections and or bear drops, this one. And so I've gone over that many times. And so that's still very, very, very much in play. And since then, we've went on to, trigger some other indexes and other key stocks. Now we're going to talk about the stocks that matter. So like today, Tesla, I told you what happened with Tesla. We already covered that. Rallied right into, had positive divergence, popped right into downtrend line resistance, got rejected there. That's where we were this morning. And I'm going to move that line up a little to just come in, capture these candle highs. I was coming down before I was capturing these candles, and I was chopping the top off these. So I always say the charts are dynamic, and so is my analysis, meaning both are, when the charts change, my analysis changes. So there's your new trend line. and you have also support right here. So that's what Tesla's doing. And again, where it goes from here, I don't have a strong opinion, but it was a big divergence heading into earnings, beat down to what you want to do at this point in time. And I'm going to get to the next one is Apple. There's been a lot going on lately. We had the failed breakout the other day, which I predicted before it happened. Once we broke out that this breakout would fail, it failed. But look what we did. We went over, remember I had this big purple line back here, 166.61 support. It was very key support to me back then. I decided to cover all shorts, go long Apple and the market off that low, but decided not to do it this time around, figuring it would fail. However, what we've done, we failed it, took out 166.61. We're back above it right now, and you still have that positive divergence. I am not buying Apple. This is, again, like I said back here, it's one of the best looking setups, but these setups keep failing so far. This is indicative of bear market action. And I had that I've shared with you recently on the PPO. I've had this line on Apple at negative 1.18, and typically when the PPO is below that, and you want to use a white line, the 9 EMA, the lassitude across, the trend is bearish, and therefore rallies tend to get sold into. And so that's what I'm looking at. So on one hand, you do have bullish divergence. In fact, last time we took it here, we had crossed back above. See, the white line was there, and we bought Apple right off that low because we were above my yellow line. Now we're below it. We could cross over. I would not short Apple here. I think there's better fish to fry. I'm going to get to those in a second. In fact, if I'm wrong on my own analysis, I'll be long Apple soon. This is one of the better looking ones. We can cross back up there. By far a better looking chart. We're looking at a stock that's already well down off its highs. Former crowd favorite before NVIDIA came along, and more recently Microsoft and Alphabet. But I just wanted to point that out. Now, long term, I've made and continue to make a bearish case. I have to roll this back a long time. Let me park that histogram out of the way. And I've covered this purple uptrend line, secular bull market uptrend line off the 2002 lows. Was it 03, 03, or 02? And we're well below that. The histogram's red, coming off a massive divergent high. So I see, my targets remain. I've never changed it. This is back to in 2022. May of 2022, when we were back here, I laid out some targets on Apple, and this trend line was one of them. And I'm still maintaining this is I have some deeper targets. I don't know if it'll get to the 82 level now. Wouldn't surprise me, but at least this yellow uptrend line now that the purple's broken. So Apple's got a lot of downside, especially if my read is correct and the market is pretty much topped. And is heading down for the next leg down in a much larger bear market than most can even imagine. Because I say that because for the last half century or so, the bear markets have averaged about a year, 15, 18 months. They were COVID went on record as the fastest one, 36% drop in the S&P 500. It was over in 6 weeks because the Fed wouldn't allow it to go down anymore. And the federal government as well with stimulus, fiscal and monetary. All right, so that's Apple. Just wanted to kind of say that's it. And yeah, don't have a, like I said, the chart still looks constructive, but the price action has been indicative of what you see in bear trends, not in bull trends. Apple should have rocketed off that. It should have rocketed on that breakout, which failed too. And it could rocket here, but it's a bet I'm not going to lay. I think there's other better fish to fry, as I said, and we're going to go through those right now. So I just wanted to mention or go over this. Let me go back to the PPO, put back that histogram. There it is. And I talked about it when Apple crossed down back below it. It was before it broke the trend line right there, and it's solidly in red. And again, this is where trends are defined. This was a sideways trend, given it didn't go down, but there was a much deeper one, and that was a big drop. That was 30-something% drop. There was another one there, and that was also close to 30% drop. There was 35% drop, 39% drop. So you get the point. And back here, that was when Apple peaked, when the market was still going up, and it was a double-digit drop. I don't have it measured, and you can see that, and that's where we are. And this is still going. Will it end soon, or will it be one of these longer term? And that's what I suspect it will. Board 5. Let me see what are my notes on board 5. Oh, it's just a cleaner board. All right, let me go to the rest of them. So I don't want to spend too much time on Apple. It's worth watching. And again, I will say it, if the market can stabilize here and start to recover some of these support levels, that have recently broken, some of the check marks that I've given the bear case. If those get negated, then I like Apple as one of my favorites. But right now, no, because that hasn't happened. All right, next up, it would be Microsoft. Let's talk on Microsoft. I'm on a weekly. I'm just going to go with the weekly. We're going to jump around time frames. Remember, Microsoft is going to report on Thursday after the close. I already shared my thoughts in previous videos. The game I'd like to play, the predicting who's going to go up or down after earnings, and I'm calling Microsoft down. This is a weekly chart, and I'm not just calling it 10% correction. I know bulls would love to see that and get into Microsoft. I'm calling for a drop that very few would probably even think is possible in Microsoft. It's just still part of the whole. We made marginal incremental new highs in a handful, namely these stocks, where the majority of stocks in the stock market didn't make new highs. So, whether you want to say we're in a bear market, that was a bear market, this was a bull market, or you want to say, this stock just happened to make new highs, but it's in a stock market that may have just completed a bear market rally. That's what I'm going off of. But divergent high, that was T1, the video I did on the first trading day of the year in 2022. That was back here, calling it down to this target here. We hit that target, as is the case in most of my price targets. You had a reaction, pretty good one there, and we held it. We held T1, as I like to say, support is support until unless broken. Then the AI mania hit. And as I said earlier, Microsoft got a leap start by investing into OpenAI right around the time ChatGPT came out and set the AI bubble on fire. And so Microsoft was a beneficiary of a lot of people's dollars on their bet on AI. And then Google, as you know, started following suit with a full court press on it. And but let's talk technicals. So this is my trend line, the best I have it drawn. I may tweak it later on, but as you can see here, we have an uptrend line, which was broken last week. But you still have major support right here. This is the benefit of the doubt support. I'm going to show it to you, and I have on the daily, but I'll show it to you again. So you can see as I zoom in tight, we took out the trend line, but we have, again, I call benefit of the doubt when I have two support levels in very close proximity and you're in a bull trend, give it the benefit of the doubt. Wait for the second one. Because why? Because if, some people see that and they want to short it, but then others see this and the buyers step in here and that level holds. So that'll be the level. And again, I've not waffled on that. I've had it 397 on the daily chart forever and a day, going back for a while here. So I just wanted to point that out. And so here is my longer term scenario for Microsoft. That's it. And again, earnings will make or break has the potential, I should say, to make or break my longer term bearish outlook in positioning. Okay, so we'll see what happens if Microsoft is down, especially if it makes a major trend change after earnings tomorrow night. Then you can see first target 313.66, and I have one here. So I didn't draw the major zigs and zags. These are or the minor, I should say. These are the major ones. T2 hasn't been hit yet. So we hit T1 here. So I have us next going down to T2, bounce, come down, then hit T3, which is this long-term secular bull market uptrend line off the early 2009 lows, that yellow trend line you see there. And Microsoft also has flipped. The PPO has made a bearish crossover, even though the stock isn't far off all-time highs. Was the same thing I told you on QQQ. QQQ, unbeknownst to some, it seemed like it was just on fire. That's what the comments were getting. But I kept pointing out, QQQ isn't going down. I'm talking in February and in March. I said QQQ is not going down, but it's not going up, and that's why the momentum indicators rolled over. They crossed over, and that gave us some kind of clues to what was to come. And so there it is. So there's Microsoft. There's where I think it's going longer term. And I've gone over this one so much, you already have my target. You can just revisit some of the recent videos. This is where I'm initially calling it down to post earnings, 200-day moving averages, and then 376, 364. NVIDIA, I'm just going through an order of market cap and the Nasdaq 100. That's why I'm picking these. This one, what a gift today. I saw one comment, somebody thanked me for 840. This was just, again, it was a massive check mark. It was the one I told you last week would be the final straw. It should do the trick on the market, and it did. We broke it, and as I said earlier today, if you missed that breakdown at 840, that was the biggest drop NVIDIA had in months, and if you missed it, well, you were given a gift today on a perfect back test of it. I mean, this was no guarantee that we would have stopped there. No guarantee that we're not going to now power on going through there. But so far, we had a perfect rejection off that level. The high was 840.82. Okay, 82 cents above on a 840 point security. That's a fraction of 1%. So that's just about a perfect tag. And so far, the stock, has dropped about 6%. So if you shorted the kickback to 840, you're already profitable. You can set your stops wherever you want them and let it run. And then it's 742, and then the trend line, it's done some longer term targets. They're not reporting this week, so they're going to do what they do. But again, the NVIDIA has the potential to crumble or even maybe go up and undo this bearish breakdown. Certainly, why would I not say that? That's certainly a possibility. Depending on what Microsoft and Alphabet say. They've already, as we all know, announced and invested insane amounts of money. They pumped into AI and announced future plans, build a what was it, like $100 billion AI facility somewhere. Microsoft's talking about doing, which is 10 times the amount of any other chip facility or data processing plant that they've ever built. Just insane numbers. So where I'm going with this is, again, they're going to report. They're going to have a conference call. I don't know if they're going to give color. I can tell you this: both CEOs, Microsoft and Alphabet, are all in on this AI thing. So I doubt they're going to come back and say, we think we made a mistake, and we're going to. But they have to, they can't intentionally conceal. I don't know what they're going to disclose. All I'm trying to tell you is, if you get wind, if the market gets wind that they're going to maybe pare back on some of that, the future capex, capital expenditures on AI, that could just be the catalyst to really just knock the living snot out of stocks like namely NVIDIA, SMCI, and of course Alphabet and Microsoft. So it should be an interesting week, guys. And like I said, it's probably a make or break week. Not to mention there's some pretty thick stuff on the economic calendar in the next day or two. So there's NVIDIA. That's my daily chart. Weekly, this is my weekly. It's already made a bearish PPO crossover. Last time we made one was right here. Remember, this has been the primary beneficiary of the AI bubble. And so while it didn't drop, it stopped going up during this period of that bearish crossover. So you could have shorted, you would have made a little loss, you would have been, if you were a bull, you were in dead money. So you either want to be out if you don't short during these periods, or you can short. Green, long and strong. There was a rally. Red, short and bearish. Red right here. Boom, we went down here. There's where we had a crossover back here. I laid this one out as a short trade idea back here. T1 was right here. We hit that. We went and hit my second target, T9, for a 69% drop. I'm sure it was heresy back then to call it, because NVIDIA was just as strong and just as beloved. Look at that uptrend. So, with precision, we got in there, identified a top, the breakdown, the back test, and then boom, came 69% drop off that high. This divergent high gave a 56% drop. So for those of you new to trading or investing, if you can't understand how I can call such aggressive targets and how the stock, it's the nature of this beast. You go back in time, and I've done it here. Divergent high on the weekly, 90% drop. Divergent high, 86%. Divergent high, 56. Divergent high, 69. And now ultimately I have a 90% downside target on T3. How can I possibly think? Well, the chip sector is super cyclical. When it's hot, it's hot. Yeah, Randy, the chip acts are not going to let it go. Well, how much of the chip acts is priced into this, that huge move? And how much of the AI hype? And again, AI, it's cool and it's here to stay, but it's an iteration of something that's AI that's been building for decades now. The bottom line is, how is it going? How soon and how much is it going to add money to companies' bottom line? That's it. When's it going to be? It's profitable for NVIDIA, of course, as long as all these big tech companies and Google and Microsoft of the world and all the others are buying their chips. But that's the thing about the semiconductor sector, and I've gone over it many times. You can look at the SOX Semiconductor Felix Index, goes back for decades. The nature of this industry is boom and bust, because once it turns and there's been super hot demand for these chips, they're pumping out capacity, they're flooding the market, and by the time they realize it's turned, there's a glut of chips and prices just crater, and they just discount those. They have to move the inventory, curtail production, because there's a flood of chips on the market. So if you're, and then don't ever underestimate a bubble. This is really, and I know some keep saying it's not a bubble. You can say what you want about it. It's opinion, but I think it's a bubble. I see it not much different than the dot-com bubble. That was a tech bubble with the internet was going to change the world. And it did change the world, but it also, resulted in a 78% crash in the Nasdaq composite. Because everything got ahead of itself. And that's what I think is happening here. So there it is, guys. Now, look, I can sit there. I just rambled and gave you fundamental thoughts, on the fundamental analysis and how things might work out. But I don't trade off fundamentals. I incorporate them into my longer-term analysis. What I trade off are technicals. And so I gave you sell signal 1 the other day, resulted in that. The time at bottom was the same day I said you're covering everything. I even covered that SMCI short for the first time since I shorted and then reshorted. So, if to expect the market to bounce is to expect all things tech to bounce. This is highly correlated. This is one of the top components of the Nasdaq 100. So you're not going to see the stock Nasdaq bounce 5% and NVIDIA go down 10. That doesn't happen because of the mathematical weighting. So to be long one is to be long the other is pretty much it. All right, so you see my levels, where I think it's going, and even near term, like everything, come on down. But this is a big support, that purple trend line, then the 200-day moving averages, then right here, 500. If you just wanted to, let's say you're an options trader where time, the reason I'm not a big fan, I've done plenty of options trading in the past, but I'm just more of a futures and individual stock, shares guy. Because I always say this, it is one thing, it's difficult enough to predict with accuracy where a stock is going, right? It's one thing to say NVIDIA is going to hit $500. It's a whole nother degree of difficulty to say not where it's going, but when it's going to get there. And that's what you need to be. That's the thing about options. With shares, you got all the time in the world. You can be early all day long. You could have shorted it here on that bearish engulfing candle. You're still I pointed it out as a short. It took about a month and a half, almost 2 months for us to break down. It's finally starting to pay off. But as an options trader, if you thought the bearish engulfing candle, if you thought NVIDIA was going to do this and already be at the 500 level, well, you didn't profit on that trade. And if you bought, just straight puts or something like that, they expired worthless unless you gave yourself a lot of time. And the problem with these high beta, high volatile stocks, you pay dearly for the premium and time, and sometimes it's not even worth it. The darn stock can get to where you expected it to get to, but if you paid so much up front and extra premium on the time premium, then that was eaten up if it takes a stock a long time to get there. So enough on that. Let's talk the other one, the big ones here. Alphabet going to report. I've already covered this quite a bit recently. I gave you my prediction, most likely down based on the divergences. Last time we had a divergent high here, and I pointed it out. We dropped right there off that divergent high. Again, it's not as if these don't work. That was a 14% drop in Alphabet off this last divergent high. But this last divergent high is a series. We've had these divergences building. That was a divergent high there. That one was a divergent high correction, bigger correction. So that was DH1, 2, 3, even bigger correction there. And this is DH4 really. Again, it's an extension that we've been making lower lows on the indicators since that point. So it's one much larger divergence that's, to me, indicates an even larger drop. Probably down to this trend line ultimately, but at least back to my purple key support levels we were watching last year when, again, we went along the market right there. All right, so when you see big divergences on the weekly like that, you can come over to, on the daily chart, you can come over to the weekly and you can draw them there. You can even put divergences on the histogram. But this one hasn't crossed yet. It's been one of the strongest stocks. So really, if you want to put the knife in the bull, you watch a bullfight. I know they're gory and graphic, and the matadors putting all those, arrows or whatever they're sticking in the darn bull. But then there's that one kill shot they finally do at the end. And so to get that kill shot where they're finally going to kill the bull for good, the matador will run it through with his sword or whatever he does. Believe me, I'm not a fan of bullfighting, but that's the analogy I'm using here. To get that, you're going to have to kill this stock, and you're going to have to kill Microsoft. And in NVIDIA, you can't say it's killed yet. It's certainly given you a very high probability sell signal. So my confidence is pretty high. It's going lower unless it regains 840. But Microsoft made a marginal new high, a breakout. So number one, if it starts to fall back down after earnings, then that breakout right here is a false breakout, aka failed breakout, aka bull trap. You have a uptrend line that gives you a wedge. You had one little pre-earnings. That was either NVIDIA. Was that the NVIDIA? I think that was the NVIDIA earnings or the Fed meeting or something there. Little whipsaw down through there. But I have this nice looking wedge here. And that's where I think Alphabet's going down here. 122.45 in the intersecting long-term uptrend line. And so that would be, I'll call this one down about 25%, something like that, depending if and when it gets there. So that is certainly a level to watch. And then the other one, let me go Meta. Amazon's next as far as weightings go. Amazon just broke down, beautiful on the weekly here. We were on a weekly. I'm going to stick with that for now. Beautiful bearish rising wedge with a breakdown last week. And that breakdown last week gave us a confirming crossover on the PPO, bearish crossover. Last time we had one was right here. You can see that happened. Time before that was right here. Time before that was right here. You get my point. That is a pretty good sell signal, and now we just need to follow through post earnings. And there's your next target. You got the 200-day moving averages and the uptrend line right here. And so that should be a drop of roughly 15% or so for Amazon. Meta, they report tonight after the close. They don't move the needle as much as they used to, but it's still, I'll tell you why, it's a $1.2 trillion market cap. Remember, the Nasdaq and the S&P, they're cap-weighted indexes, although in the Nasdaq 100, they have a much higher weighting. But Meta's a $1.2 trillion company. That compares to Microsoft being a $3 trillion company. Apple 2.6 right now, NVIDIA 2 trillion, Alphabet 2 trillion. Amazon 1.8. So this is of all the Mag former FK, former Mag 7 stocks. Tesla's in there too, but Tesla's 451 billion. So a fraction. It's going to take almost 6 Teslas to equal one Microsoft as far as the weightings go. So there's your beautiful uptrend line. I've been talking about it forever and a day, and we've yet to break it. We were here on it. We were here, thought we could break it. We were starting to diverge. Went up, had another thrust up. We're back on the trend line now. No trend line lasts forever. This one looks ripe for a breakdown. The divergences tell me a breakdown is likely coming, and that's all we need. So there's your levels. And then below that, BOD is 454.43. Benefit of the doubt. Massive gap right there. If that level is taken out, the gap will likely be backfilled. And that's an initial target right there. And that's going to take Meta down about 22% down to my about 400 target. And you have the 200 days right below that. Okay, there's the levels to watch. I'll give you both, my expectation, support levels that if and when broken will most likely lead to more selling or offer objective short entries or add-ons for any of these stocks individually or for the market. And likewise, I gave you something if you're bullish, what you want to see happen, Apple and other things like that, and even the market. You want to see NVIDIA back above key support, QQQ, and we're not far from it, guys. They could pop it, and we could be ripping next week. We could be ripping on Friday, depending on how these earnings go. Like I said, I've given you my thoughts. And I'll probably lighten up a little bit before those. Meta doesn't scare me too much. The big ones, they can really move. Thursday is going to move the needle. The market is going to be most likely either up really nice or down really nice on Friday after the big ones report. So And again, we do have, like I said, it could be, we could have some movement tomorrow with Meta and the economic reports that are on the calendar. Here, I've got it for you here. Tomorrow, GDP, there's a big one. Jobless claims, and then personal income and outlays on Friday. So it's not just the earnings calendar this week, it's the economic calendar as well. All right, guys, I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.